Alrighty, looks like we're going. So in my last video, I was not so politely asked to put a shirt on. So of course, I'm again not going to wear a shirt for this video. But anyway, what's up, guys? John here with Option Lab. This one, I'm going to make it super quick, straight to the point. Make sure your monkey brain and short attention span can make it through this whole video, because I promise if you do, you will learn a method that is super high probability, prints cash in the background while you do almost nothing, and has helped me buy an M4 competition this year, travel around the world, and help a bunch of you guys who I've been talking to in my free Discord. If you guys want to learn more, hop in. I message each of you personally, so that's been going well. Anyway, let's get into this. So let me shrink myself here. Okay, so $20,902.99 in 1 week, or 3 weeks with one stock. So if you guys are not familiar with my channel, I sell option premium strategies. So that's net credit strategies like naked puts, bull put spreads, bear call spreads, strangles, iron condors, etc. So let me show you guys on this stock the positions I took to make about 21,000 in 3 weeks. So the stock I was trading was MSTR. So MSTR, and I took a snapshot here of all of the orders that I entered. So why did I choose this stock? Number one, so first of all, high IV. Bitcoin has been all over the place, so implied volatility on the stock was high because they own 30% Bitcoin. So premiums on both the call and put side were super juicy, so I could sell strangles. That means selling a put and a call. If you guys don't know what that means and you're a total beginner, selling a put would be like this, and as long as the stock stays above your strike price by expiration, you collect your premium. And selling a naked call would be selling a call above the strike price or above the stock price and keeping the premium as long as the stock stays below by expiration. Anyway, this is the method I used. So if you look here, let me drag it over. So you can see here, I opened up on 11/22 and 11/25. I sold two sets of puts. The first was the 220 strike, and the second was the 230. And you can see here, I was just collecting 2,000, 1,000, 2,500, and I surrounded the stock. So if this is the stock, right? I surrounded the stock by naked calls, naked puts that are so far out of the money, and I'm talking some of these were 0.1, 0.15 delta or 85% likelihood that it didn't go there. I just surrounded it with them, and I just collected a ton of premium, and I'll show you guys on the option chain what that looks like. So if you guys don't know, I have a screener on Bloomberg that scans for all of this. That's in my Discord. Just message me if you want help with it. But if you look here at the strikes that I entered, I'm looking at on volatile stocks like this, puts that are under a 20 delta. So that means if we're looking at the stock, it means that the strike price I choose for my naked put or my bull put spread, that top leg, I want it to be over 80% probability. So in this case, almost all of these I think were over 80% probability on both the put and call side. As you can see here, I have it set up on my option chain where it gives me the deltas right here. That's the probability that's going to be out of the money if you take 1 minus that. And you could see just the premiums were just humongous on this, so far out of the money, and not that long till expiration, like a week or two. So that was the puts, and you can do the same thing on the call side, right? So surrounding that stock by either a condor or a strangle, and you could see these deltas. I mean, 80% plus probability, and you're getting $800-900. So it's pretty darn good. So right here, I kind of just laid out, if you guys want to see quickly, these are the positions. I obviously sent this out in my newsletter. I know a couple of you guys just yesterday joined my last video was kind of picking up steam. So I've been helping a few of you guys get set up with this. But you have to have level 3 options enabled to do these strategies because it requires selling to open naked puts or credit spreads. So let's explain kind of how this works for a small account, because a lot of you guys can't sell naked puts. So you are going to have to create some variation of that. And this is what would be called a condor. So let's just imagine here what I was doing is I was picking strike prices. I was selling naked puts and calls so that I didn't have this protective leg on either side. So if the stock went below here, I got to sign the shares. And if the stock went above here by expiration, I got short the shares. To prevent this from happening and having to tie up all your margin and your money, what you can do is you can add a protective leg on either side of your naked option. That creates a spread. So this is what's called a bull put spread, where you sell a slightly less out of the money put, and then you buy a slightly more out of the money put. This creates a net credit, and it also creates a circumstance where you have a limited risk and limited reward trade. And all that has to happen by expiration is that the stock stays above your top leg. Super simple to understand. Like I said, if you guys are new to this, which a lot of you probably are, just shoot me a message. So what you can do is, if this stock is trading in the middle, you can create a net credit situation on both sides. So as long as the stock stays within your two sold to open legs, so all in here, that's all profit, right? Because these will both expire worthless. You'll keep your premium, your net premium, and those will both expire worthless, and you keep your net premium. So the key is scanning for stocks, picking stocks that have good enough IV where you can go super far out of the money and still get good premium. And that was the secret here. Bitcoin was just all over. I took advantage of the volatility, struck with a quick 21,000 in 3 weeks. Shoot me a message, leave me a comment if you have any questions, and I'll see you guys in the next one.